Is the AI bubble hitting a peak? NVIDIA stock is now up almost 200% from its lows in October of last year after having increased its guidance by almost 50% for the second quarter of 2023. This makes NVIDIA one of the top 5 most valuable companies in the S&P 500 in the United States, coming up to that $1 trillion market cap mark. And with the company only doing around $26 billion in annual revenue, that valuation certainly seems quite hefty, which is leading many institutional and retail investors to question this massive AI rally. But as much as I like to be cautious in the stock market, folks, there is good reason to believe that this AI boom is only just getting started. In this video, I want to explain exactly what NVIDIA detailed in its latest earnings report that skyrocketed the stock by more than 25%. I also want to dive into some of the recent performances of most AI stocks to understand where this bubble fits into prior bubbles over the past 20 to 30 years. And we'll also have a look at what metrics make NVIDIA overvalued and in some cases undervalued for many investors. But as usual, folks, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So to start things off, folks, let's understand exactly what NVIDIA gave us that has resulted in this AI frenzy. Stock is up over 25% after NVIDIA beat both revenue and EPS estimates by almost 10 to 19% and gave Q2 guidance of $11 billion in revenue, which is more than 54% above analyst estimates. Now, if you ask me, those are truly fantastic results no matter how you put it. Yes, NVIDIA's revenue on a year-over-year basis is still down for the first quarter, but in a time of recession where most stocks are being discounted for higher interest rates, this kind of performance from NVIDIA really goes to show that the large cap tech sector of the United States is still holding relatively strong. And not only that, but the semiconductor industry in particular has a very strong moat, and demand for chips and computing power is not going to slow down anytime soon. And well, believe it or not, folks, even though the past 48 hours seems to be the glory days for NVIDIA, this rally has been in a long time coming, with the stock having bottomed in October and being up almost 250%. And yes, although there is no guarantee of future performance from past performance in the stock market, there have been some good performances from NVIDIA's business that has warranted this massive increase in value. For those that don't know, NVIDIA operates in 3 core businesses, that being automotive, gaming, and data centers. Gaming obviously is the most popular branch of NVIDIA, with the GeForce RTX and GTX lineups being used in hundreds of thousands of gaming computers across the world. This has been the core bread and butter of NVIDIA's business, where they've been pioneering a chip-on-a-board design to maximize graphical performance for gaming applications. But because cloud computing and artificial intelligence have grown substantially over the past 10 years, as well as a demand for back-end servers, NVIDIA found a strong purpose in the data center market, with it being double the size of their gaming market today. This means that NVIDIA's business is much more immune to the cyclicality and recessionary forces acted on by the gaming industry, which we have obviously seen slow down since 2020 and 2021. NVIDIA is now more of a board and chip supplier, unlike Intel or AMD, leaving it much more susceptible to cash flow and faster growth, which is something we are starting to witness for the second quarter. And as it turns out, a lot of that growth is being driven by NVIDIA's A100 stack, which is currently being used by the likes of Microsoft and Google for its data center applications. And obviously, it is also being leveraged by OpenAI, which are the developers of ChatGPT. Believe it or not, deep learning and machine learning, which are subsets of the artificial intelligence mantra, require a lot of computing power. And well, the technological edge that NVIDIA has in the GPU space is currently being leveraged for AI pretty well. And although yes, at a forward PE of almost $62 a share with a price to sales ratio of more than 35, NVIDIA could certainly see a relaxation in its price movements in the short term. But don't mistake that for a cool down in the overall AI movement anytime soon, and here's why. You see, first of all, most bubbles in the technology space tend to start with a massive inflow of cash and tend to end with rate cuts from the Federal Reserve. And right now, we are not seeing any of those take place, which means this current rally we are seeing in AI-related stocks like NVIDIA is just the beginning. And like I've said, this does not necessarily mean that NVIDIA stock is going to go up another 200% from here over the next 2 months. NVIDIA could certainly pull back, but the performance of this business goes to show that we're going to see supply chain related effects across the overall AI industry. For companies like Microsoft and Google, this means competition and adoption is going to increase. Whereas for businesses like semiconductors and AMD and TSMC, this means profit margins are going to start going up as well as revenue. Because guess what, folks? Throughout every single bubble in history and general market rally, valuations for stocks tend to go up and they tend to go down, as is clearly visible with how NVIDIA's price to sales has performed over the past 20 years. After the company IPO'd in 1999, NVIDIA's price to sales skyrocketed, and then it stayed flat for the next almost 20 years until 2016, when the company started to generate free cash flow. That resulted in accelerated growth for NVIDIA's business as people started gaming more, and NVIDIA's RTX lineup launched in 2018. Then we saw the supply chain crisis and the trade war in China, which resulted in a decline, and then obviously the pandemic-related boom, which resulted in crypto mining and gaming demand. But now that ChatGPT has showed the potential of artificial intelligence-related computing, this stock's valuation has almost tripled all the way up to $30. And although this seems very bubbly, don't mistake it for the overall industry being in a bubble. Because as you can clearly see right now, the AI industry in 2023 is only a baby bubble relative to where past bubbles have been. As you can see, Bitcoin and the ARK-K innovation bubble were magnitudes higher where the AI bubble lasts today. NVIDIA and Microsoft are really the only two tickers leading this charge in the large cap sector, but in the small and mid cap sector, you still have a lot of companies that have quite a bit of potential if this continues. Because guess what? Through NVIDIA's first quarter data center revenue of more than $4.2 billion, investors now have solid evidence that the AI boom is actually resulting in material growth for the overall industry. Whether it be for software service providers like C3 AI or Palantir, or cloud computers like NVIDIA, Microsoft, Google, or Amazon, clearly demand for data centers and high power computing is increasing, which means that customer end demand is also increasing for AI-based applications. And although this rally seems extremely overextended, just remember that most bubbles last a lot longer than most people expect. And this current AI bubble is only at the very beginning of this stage. Whether this is time to take advantage or to sit on the sidelines, I'll let you decide that for yourself. As usual, guys, this is just my opinion. Let me know your thoughts on the AI bubble down in the comment section below, and I'll catch you guys in the next one. Take care.